Listen closely because what I'm about to tell you could change the way you see everything that's been happening with Pi Network. I know you're tired of waiting. I know the excitement that once filled your screen every day has slowly faded. Maybe you've even wondered if Pi will ever become more than a digital dream, just another project that promised the world and delivered nothing. But what if I told you that? Right now, behind the scenes, some of the biggest banks in China and Nigeria are quietly building real infrastructure to integrate with Pi Network. Not talking about possibilities. Not talking about maybe one day. I'm talking about now, today, actual development, real systems being tested. Before we dive deeper, make sure you follow me on Telegram and Facebook. That's where the real news drops first, long before it reaches the surface. Because the truth is, what's coming next for Pi could redefine everything you thought you knew about money and digital finance. Here's the part most people miss. Banks don't chase hype, and they don't chase rumors. They chase profits, growth, and massive user bases. When they look at Pi Network, they don't see a crypto token floating in uncertainty. They see millions of active users, an entire digital community waiting to be connected to the global financial system. That's not a fantasy. That's a market they've been trying to reach for decades. And this isn't just about creating another cryptocurrency exchange. This is about something far bigger, financial inclusion on a global scale. While most people online were arguing about Pi's value and when the open mainnet will launch, the real builders, the visionaries and financial engineers, have been working quietly, laying the digital foundations that will soon connect banks and Pi's blockchain together. The conversation isn't if anymore. It's how soon. Now, let's take a look at what's happening in China. This is a country that leads the world in digital payments. People buy street food with their phones. Even small local vendors accept digital payments from Alipay or WeChat Pay. Physical cash is almost gone. So, when a major Chinese bank starts exploring integration with Pi Network, they're not playing games. They're not experimenting for publicity. They're securing access to something that expands beyond China's borders, a global audience. They see Pi Network as a bridge, a powerful connection for international trade and remittances. Imagine the possibilities. China's sophisticated payment ecosystem linked directly with millions of Pi users worldwide. Instant, low-cost cross-border transactions that used to take days and cost heavy fees could soon happen in seconds. This isn't science fiction. It's the logical next step in digital finance. Now, let's move to Nigeria. A completely different landscape, but equally powerful. Nigeria has one of the youngest, most creative, and most tech-savvy populations on the planet. Crypto adoption there is among the highest in Africa. Yet, millions still don't have access to traditional banking. Entire communities are left out of the financial system. When Nigerian banks explore partnerships with Pi, they're not just chasing trends, they're chasing impact. They see an opportunity to reach the unbanked, to offer financial services to people who have never held a bank account in their lives. Through Pi, they can connect with a population that already trusts the platform, already uses it, already believes in it. For these banks, Pi isn't competition. It's the missing piece that unlocks a new market they've struggled to reach for years. And here's where things get fascinating. The technology behind these partnerships. Think of it like building a bridge between two islands. One is the Pi Network, the other is traditional banking. The first step in that bridge is what we call on-ramps and off-ramps. An on-ramp converts your regular money, dollars, yuan, naira, into Pi. An off-ramp does the reverse, turning Pi into spendable local currency. Now imagine opening your bank's mobile app and seeing your Pi balance right there beside your regular account. You could buy or sell Pi anytime you want, legally, safely, and instantly. The bank handles all compliance, all record-keeping, all security. That's how Pi transitions from a digital dream into real-world daily use. But that's only the beginning. Banks also bring something that crypto alone has struggled to provide: custody. Secure storage. Most people don't want to deal with private keys or wallet recovery phrases. They want peace of mind. Banks offer exactly that. Safe digital vaults to protect your Pi, just like your regular deposits. You still own it, but they manage the technical security. It's like having a savings account, but for your digital assets. Then comes the magic glue that connects everything: APIs, or application programming interfaces. These act like messengers between Pi's blockchain and the bank system, handling real-time data, transactions, and balances. You'll be able to check your Pi, transfer funds, or make payments right inside your banking app. Seamless, unified, efficient. And the secret ingredient making this all smoother? Stablecoins. These are digital tokens pegged to real-world currencies, like the dollar or euro. They don't fluctuate. When banks integrate Pi, stablecoins can serve as a steady bridge for instant swaps between fiat and Pi. Sending money from Nigeria to China could soon take seconds instead of days, with zero hidden fees and no exchange rate surprises. That's how remittances, one of the biggest global financial pain points, get revolutionized. Let's talk about what this means for ordinary people like you and me. First, security becomes ironclad. Banks bring decades of expertise in fraud prevention, insurance, and financial compliance. Your assets are protected under professional standards. Second, convenience skyrockets. No more juggling between apps or wallets. You manage all your money, both fiat and Pi, in one place. Third, fees drop to near zero. Traditional systems charge up to 15% for international transfers. Pi's model, with banking integration, could cut that down to fractions of a percent. But let's be real. None of this comes without challenges. Regulation remains a major hurdle. Every country has its own laws about crypto and digital payments. That's why Pi's developers and partner banks are working closely with regulators, ensuring everything is transparent and compliant. Liquidity is another issue, making sure people can buy or sell Pi smoothly without wild price swings. Banks can solve that by becoming market makers and linking Pi to major exchanges. And then there's trust. People need to know their money is safe. That's why education and real-world use cases are essential. When people see it working, when they can send money, make payments, and see results instantly, that trust grows naturally. Picture this: a worker in Dubai sending money home to family in the Philippines. Normally, they lose nearly 20% of their hard-earned salary and fees. With Pi integrated through banking partnerships, that money arrives in seconds, almost intact. Families get more. Lives improved. Or imagine a shop owner in Lagos who no longer fears theft or loss. She accepts Pi payments through her phone, instantly settles transactions, and even qualifies for a small business loan thanks to transparent transaction records.